Fox Business Post. But Paul, welcome. Paul is with Foxhall, and he's got a fund. Needless to say, Foxhall Global Trends. You're up. He's up 12% year to date, although I'm sure that has changed just a little bit today.
I'm positive that it's changed over the last week, but we have done very well. We believe that the fundamentals in the stock market are as good as they've been at any time over the last 10 years. I mean, you have 18% growth in the S&P earnings this year, 2.2 trillion in cash that these companies have, productivity we haven't seen in a long time, and now PEs that are at giveaway levels. And I just think that people who are selling today are going to regret this in about 2 weeks. We haven't seen an oversold market like this since March 9th of 2009, and then we saw it just go straight up, and I believe we're going to see the same thing now. What the difference is, fundamentals in the companies, the S&P 500 companies, weren't all that great on March 9th, 2009. They're as good as they've ever been for 10 years right now.
You sound extraordinarily bullish. Now, what are you buying?
Well, I particularly like a lot of Latin American stocks. We're global investors. Okay. If there's any markets that are more oversold than the U.S. stock market, it's Latin America. I particularly like American Mobile, which is the biggest cell phone company in Latin America. It has more subscribers than both AT&T and Verizon.
Okay. Latin America, I would understand. Do you like anything in the United States right now, especially when you start seeing a lot of good companies going through a very hard time, 52-week lows?
I love all the boring blue chip stocks, especially those with global brands that are selling all over the world. These things have been knocked down, and again, they have very little debt. The debt that they have is locked in for a long period of time at very low rates.
And what must you have thought of the downgrade? When we look at a list, say, for example, of the countries rather, that we are now in for the United States at AA+ versus AAA, we've got New Zealand. I mean, that's not the worst thing in the world. It's a lot smaller than us, but Belgium, the United States. But what shocks me is, worse rated are countries everybody looks up to, like China at the moment, saying how great everything is in China.
Yeah, this is crazy. This was a political decision, had nothing to do with the underlying fundamentals. At least the bond market a couple of hours ago was actually selling short-term treasuries cheaper than they were on Friday. The bond market's saying this is a non-event.
Okay. Paul, I got to interrupt you. Can you pan right up there? The Dow Jones Industrial is now down 566. Granted, we had been down 605, so at 10,872 at the very moment. Look, what we saw on Thursday was an acceleration of the selling in that last hour, especially the last 20 minutes or so. Do you care what happens today? I mean, Dick Grosso, formerly of the New York Stock Exchange, said, take an aspirin, forget today, throw it out.
Look, we're seeing fear, we're seeing greed, we're seeing capitulation, and these are all signs of a market bottom. And I think in the next week or so, we're going to see it just go straight up.
All right. Paul Dietrich, come on with me. Stay here. Don't move. We'll be right back with much more. But in the meantime, we want to get to Nicole Petalides, who has also just been looking and trolling through her stock charts. And Nicole, at a time when we've talked about the banks and all of that, what else do you see that is really jumping out at you?
Well, what just jumped out at me is the market on close orders. 1.7 million shares for sale on Kraft Foods, a Dow component. So that is for sale. You're looking at those financials that are selling off sharply. The financials are selling off sharply here on Wall Street. The Dow's down nearly 600 points. We're just about 5 points away from our lows of the session. But with the market on close orders pointing to the sell side, you know what that means. The market's going to come in. It means that it's going to sell off more. Here's the point, though. The point is that it does not necessarily mean that we stay here. Here we are at session lows at 624 points on the Dow Jones Industrial Average to the downside, closing below the 11,000 mark since last October 19th. The Dow Jones Industrial Average down 8.5% below its 200-day moving average. We haven't seen that since 2009. Does that mean the market's oversold? Maybe, maybe not. But we heard from Duncan Niederauer, he said to us here at the Fox Business Network exclusively, saying that he thought the selling was a bit arbitrary, particularly seeing the backing from the ECB. So with that, heavy volume here. 2 billion shares basically changing hands. The VIX, the fear index, moving higher, and those bank stocks are selling off in a big way, with Bank of America, the biggest of a bunch, down about 19%.
All right, Nicole, thank you. You know what? We were just down almost 605 points again, 5.25% for the Dow Jones Industrials. What will happen in these last couple of minutes? We do have 13 minutes to go. Let me grab Alan Valdez. Alan, are you ready? Can we talk right now?
Hi, Liz, yes.
Tell me the flows that you saw, what your clients were doing, selling or buying.
You know, on balance, they were selling, but a lot of them were backing up and letting the dust settle. But on balance, they were selling.
On balance, selling.
Yeah, on balance, they were definitely
Are you sure
selling.
about? I'm trying to push him to go the other way. What jumped out at you as far as behavior on this floor was concerned today? I mean, look, it's obviously a historic day. First day of trade since the U.S. was downgraded from its AAA status. First time in 70 years. What do you think of that?
Well, you know, that is unbelievable that we were downgraded. But that said, on the floor, very orderly selling. There was no panic.
Okay.
There was no screaming. It was very orderly right across the board. But I think caught a lot of people off guard that we're down 600 points. I didn't think most people thought we'd be down that much, that you would see buying come in. But if you look at the internals, which is amazing, the down volume's 1.9 billion, and the up volume's only 23 million, which I've never seen that kind of disparity.
For a while there, Procter & Gamble was the one Dow Jones Industrial that was moving higher. But look, the volatility index, the so-called fear index, up 41% right now.
We haven't seen that since 2007 and 8. I mean, that's incredible, up so much. And you know, 90% of the S&Ps are down today.
Okay, Dow Jones Industrials, I'm being told right now, down 613 points at 17 points. So what do you expect to see here at the close? We have about 11 minutes left.
Well, it's still
worse?
Yeah, because the imbalances are on the sell side right now. We're getting more imbalances on the sell side and the buy side. So you could see us, if you look at the transports, they're telling you could trade a little lower here.
Okay, let's see if we can get a transports board up there for a second at the moment. Alan, thank you.
Thanks, Liz.
All these traders are taking their time out from, you know, making commissions on the trades that they're seeing at the moment to talk with Fox Business, so we definitely appreciate that, Robert Gray. I mean, I know you've been down here before, too, but again, important to note what Alan just said. No panic selling, very calm, but definite selling at the moment. To you, Robert.
Yeah, Liz, it has been an orderly sell-off. In fact, the correction catching some folks, strategists on Wall Street, off guard. They expected a bit of a drop, but certainly not this quick. In fact, the selling we've seen over the past week and change, really unprecedented, according to some. Sundial Capital, for one of those, saying, you know, what we've seen is not been seen in 70 years, going back to the 40s, to see the downward pressure, the number of stocks that are down, like we've seen today. And, you know, we've talked about our own debt situation here with the downgrade, but look at some of the American depository receipts for European banks. And we're not talking about National Bank of Greece or Banco Santander, which we look at some of the so-called peripheral nations. We're looking at banks like Deutsche Bank in the center of the European Union. They are under duress in today's session. You've got them down as much as 14%. These are trades here on the U.S. exchange. You've also got RBS, Royal Bank of Scotland, down 16%. So there is a lot of concern that the debt crisis there, Liz, is expanding from those peripheral nations like Greece, Italy, Spain, Portugal, Ireland, and going into the central core of the European Union. The ECB, of course, the European Central Bank, is expanding its purchases of sovereign debt from those so-called PIGS nations to include more of them now, including Spain and Italy. So there's still very much a lot of concern on Europe, and that is just piling on to our own homegrown debt concerns.
Robert, I want to put something into perspective for our viewers. Canada has been downgraded in the past and then got its AAA rating back. When Canada was downgraded, I believe it was 1993, its stock market performed to the upside by 15% in the following 12 months. When Japan lost its AAA rating, its stock market moved up 25% in the following 12 months after that. So as I bring back Paul Dietrich here of Foxhall, could our markets do the same?
I think they will do the same, and I think we're not going to have to wait 12 months for it. We're seeing a bottoming out. You know, a lot of people are worried about a slowing economy, and the government statistics did show that, and it was true. But I look at some leading economic indicators, or leading indicators, that show that we're bottoming out and consumer spending is going up. General Motors sold 37% more cars. Their sales rose up 37%. Visa.
So you don't buy that consumer spending number that dipped to the negative side most recently?
I actually believe that it probably did, and we're at a process of bottoming out. But you look at the more current indicators, like Costco sales, Walmart sales, sales tax revenues going up 4.7%. We're seeing Visa and MasterCard going up in double digits. Somebody's spending out there, And I believe we're at the bottom. I think we'll bounce around the bottom for a while, but I believe within the next quarter or two, you're going to start seeing a movement up of consumer spending. And then all this negative talk we're going to be looking at is really going to look, we're experiencing the market bottom right now.
Right now. And let me just say, thank you very much, Paul. We are seeing the most active stocks right now: General Motors, Ford,